Good evening, folks. Welcome to TopGunStockTrading.com, where we're neither bulls nor bears. We just want to be on the right side of that trade. What a day it was. The markets got rocked, absolutely rocked today. The spiders down 2.25%, down 4 points. The Dow Jones Industrial Average off over 300 points, with the Russell down over 36 points. Absolutely devastating day today on Wall Street. But if you know how to play the markets and you know you're cautious, you're sitting okay. Like I said last week, this level of 177.32 is a temporary support. I did expect the market to bounce a little higher, up above, not above it, but up to 181.66 before it started this next leg down. And that's exactly why I got stopped out of the SSO there at 94 and change. Because I wanted to step aside and let the market do its thing. I totally expected again to bounce up here to 181, but it just didn't do it. So, and today it got absolutely rocked today on I don't know, whatever news was out today, some manufacturing data or producer. I don't know. I don't know what the news was, but it sold off today on very high volume, 254 million shares on the spider. So pretty high volume, large red bar that tells you there's probably more downside to go, which I think there is. And again, 2014 I think is going to be a bear. Well, I won't say I know it's going to be a bearish year, but the cycles definitely point to 2014 being a bearish year. And in fact, I think we're going to be off 20 to 30% off these highs that we attained back here on the first day of the trading year. On the first day of the trading year, which was 184.07, actually 184.69 was the high of last year made on New Year's Eve. So I think we're going to be off 30% off of that. So whatever that number is, 54 points, so 130, 20 to 30%. So anywhere from 160 down 150 to 160 down in this area, I think could be the low of the year here. 157.37 is what I got penciled in. So that's a long ways off, and that's a lot of pain between here and there. So hopefully it doesn't go that far, but that's what I'm seeing in my calculations. We'll see how it goes. Hey, today I picked up some SSO near the end of the day. I picked it up at 91.20. I didn't put it on the Fox 3 alerts, but I did put it in the traders forum. Again, I picked up SSO at $90.21. Let me just check that price real quick. It is $91.20 today is what I got the SSO at. We're in some temporary support here. Again, I don't think it's anything. We're not going to get a big bounce, but I expect a small bounce off this level, off this 170. $174 range off the spiders here. So this is what I'm looking at. I'm looking at this gap window, and I'm looking at this past resistance here is what I'm looking at. And again, I trade off, even though I'm trading the SSO, I base my entries and exits off the spider, which is obviously the 1 times ETF for the S&P, whereas the SSO is 2 times ETF. There's too many distortions in when you get into 2 and 3 times leverage ETF, so I go off to the base one, or in this case it'd be the spiders SPY, to base my entry point on the SSO. So I'm in that trade. I'm expecting a bounce. I just ease into it a half a position. I didn't go a full position because of the large volume downside move today. That it could have a little bit more downside before it finds any bottom. The good thing I saw today was on CNBC. I believe it's CNBC website saying that the Dow was off 300 points and probably has further room to go down. So being a contrarian that I am, I had to look at that and chuckle and think that at least the short-term bottom, and I say short-term, a month, if even that long, 2 to 3 weeks, bottom is in the market. But we'll see. I start seeing that. I think we're close to the bottom. When people start losing faith and thinking that we're never going to go up again, that's when it's time to buy. All right, folks. So today, again, 91.21 in the SSO, and I'm looking for the market to bounce here. Let's take a look at oil. Oil got off about a quarter day. At least the USO was on down 28 cents, and this is what I look at. We can look at certainly the price of a barrel of oil, which is real time, and they're still trading oil. So you'll see on my ticker it's up 11 cents, but you can see it's started a new day there. But today it opened at 97.40 and closed at 96.67. So it looks like it's down about 70 cents. No big deal here. Still putting in kind of a choppy pattern, higher lows and higher highs. It tells you oil is still on the way up here. Even though it's coming back in a little bit, you can see at 12 cents it's getting I wouldn't even call that a bounce, just a trader fluctuations type of thing. But the general trend is generally up, and I think this thing goes up into this double top here, $100 a barrel. Probably pierces that by a couple pennies before it. There's basically a wall of resistance between $100 a barrel and $102 a barrel. So up in that range is where I'll be looking. I'll be looking to short oil anywhere from this double top 100 pierce of 100 down to there. So anywhere in this area is where I'll be looking to short oil, and I'll be looking to short it via the SCO. All right, SCO, and that's about this on the USO. It's about 36 to about $37, in between $36 and $37 on the USO. Again, that's a single or one times long ETF of the USO, whereas SCO is the ultra short or twice bear oil. So if I'm moving too fast for you, I'll certainly try to slow down. And when we say we're short, I'm assuming some sort of investment knowledge here. But when I say I'm short an equity, it means my position is that it will go down. So if it goes down, I make money. If it goes up, I lose money on a short position. When you're long a position, the opposite's true. So you're I don't like to use the word bet, but you're hedging your position that the equity will go up, vice down, and that's traditionally the average investor is only goes long positions. Until recently, they just made these the ETFs that allows the average investor to go short an equity or usually a group of equities. Like housing, or a couple weeks back, I was short the biotech via the IBB. So I bought a put on the IBB, which is short the Nasdaq Biotech. And as you can see, we covered this position, not to get too far off track here. 238. It went down to 235. I was looking to get another short off up here towards the top. I was looking at 253 area. Didn't get up that high. Just pierced 250, which is a great short. Pierce of a nice round even number before it sold off again today at $7 and sold off $7.48. So what we'll be looking for here, and you can see it came right into my support line of 238.77. It closed at 238.43. So this stuff is powerful stuff. These technical indicators. So what am I looking for? IBB, just like a similar pattern which you saw here, sideways to upwards consolidation. I'll show you exactly what I'm looking for. I've drawn it out many times for you folks, and some of the traders here are a little bit more advanced than the others, but I'm here to teach the average investor the ways of Wall Street and how to take your money back from Wall Street that they took. So here we go. I'm looking for a pattern that looks something like this. So slight every day just kind of moves up a little bit, and as it comes into a time factor is when we'll get off that short, as well as a price, and then obviously the pattern is already inherent in that bear and spirit of bear flag. So upwards moving over the next week or two. We'll look, not a week or two, but over the next 10 trading days, so let's say, we'll look to get a short off on the IBB again, because I think this IBB is way up on thin air. Biotechnology is very speculative. All these biotechs, it's a very speculative industry. When the next new drug is going to get approved or come out, or whatever have you, biotech is the first I think is very weak and it's up on thin air. So we'll be looking to get a short off on that. So back to the action. Didn't mean to get that far off track for you guys. Looking at taking a look at gold. Gold went up 1% today. Again, I cannot get this gold to give me a pattern. As you can see, I was messing with it this weekend, trying to figure out where a good spot was to get gold, and I have my Fibonacci's drawn out there on the monthly chart. I'll be looking to here. I'll get rid of it for you here. As you can see, we're into a nice 618 retrace, but it's the second time it hit there. So on the monthly chart, gold is setting up to be a bearish, slightly bearish, but we'll see if that plays out. My cycles are telling me that this is a bullish year for gold. So we'll see how that plays off. So looking at the weekly chart, gold got a bounce here at double bottom, still moving up, and it's putting in kind of a choppy pattern there. I can't make heads or tails of it. And you go to the daily pattern, it's certainly a chop and slop here, just chopping around. What I like to see, as I've drawn in here before, is a nice move up, followed by sideways consolidation now. So this is basically, we've got lots of chop and slop here, down, up type of thing. So I'm not comfortable entering a trade when an equity or a commodity, in this case, is that choppy, because it doesn't give me a whole lot of confidence that that stock's going to do what I think it's going to do, or what the charts are telling me. So I just choose to step aside and let the chart play out. Just same thing we did with the SSO last week. Is it wasn't giving us, it was chopping and slopping, and wasn't giving us the right the bounce that we thought. So we just stepped aside, stopped out of it with a basically a flat gain on that, if you will, and let it do its thing. And obviously today it sold off. So charts have the answer. As far as gold is concerned, again, chop and slop. I can't get a nice pattern in here, so I'll wait for that thing to present a nice pattern for us to get in. Otherwise, I'll just watch it and see, let it play out. The strong stop today. Let's move on to Apple. This is probably one of the most widely traded stocks and widely watched stocks there is. As you can see, it came into one of my support levels. I had this as a minor support. I expect a minor bounce off at 496.97. You can see it went down on Friday as low as 493, so $4 off, which is basically maybe 1% lower than what my level is. You can see it's getting a bounce here. I'm not touching Apple until it gets down to this level, 479.81. A Pierce of $480. You can see there's a lot of support in this area. If we look back on the weekly chart, there'll be a lot more support there as you as I fix my charts here for you. For the gold level, you can see it was a stop here back in 2012 on the weekly chart before it continued on its up frame. So again, this is probably just a bounce area in these parts. I'll continue to watch it on the weekly chart. The biggest reason why a pattern fails is because the bigger time frame does not support the lower time frame. In other words, if you get a nice pattern on the daily, it's good to take a look at the weekly to see if the weekly supports that. If it doesn't, then it's probably not a high percentage trade, and you ought to reconsider your position in it. As far as this case, long red bar, high volume, that tells me Apple's going lower. Okay, over the next couple 1 to 2 months, Apple's going lower. What we do here at TopGunStockTrading.com is we play the bounces. So that's why swing trading, we're in a stock 1, 2, 3, 4 days, maybe a week, rarely a couple weeks, if that. So that's a real short-term trade when compared to the average investor or the media likes to pretend, the Warren Buffetts of the world, the buy and holds of the world. We're in and out short term. So when I buy a support level, again, I'm just looking for a bounce to get out, and then I'm on to the next trade. I don't hold anything too long in this market. So Apple, I like the Pierce of the 480. Oh, by the way, on the weekly chart, it's coming. That's going to be the 50 as well. So that's why I like it. Both I have a master level down at that, and I also have the 50-day weekly moving average at that. It's also a prior form of a prior point of resistance, and you can also see it kind of back tested that line back here in September of last year before it took off again. So a couple reasons why, and that's why I like Apple. Hey, let's move on to Target. Target I am out of the money on. About ready to stop out of this equity. Again, that's part of trading, is you have to know when to stop out. So off the daily chart, off my alerts, I said 56.21. I need to confirm below 56.21. Today was the first close below 56.21, so we'll see how that plays out tomorrow. If we get confirmation below that level, then we'll be looking to stop out. Expect that to possibly happen. If it does happen towards the end of the day, tomorrow is when I'll obviously wait to the close to the end of the day before we stop out of that to see, give it a chance. So if we confirm below the 56.21 level, we'll be looking to stop out of that. All right, I do have another support level down here, but I'm going to stick to my discipline and minimize your losses. So move on to FXC. FXC today got a bid in the morning and then just kind of floated the rest of the day down. So you can see it opened up here at almost $90 and then kind of floated down or sold the rest of the day. So we'll see how that goes. A nice big bounce on that, especially for a currency. Up 0.4% is not bad for the Canadian dollar. Again, we're long Canadian dollars, but buying the FXC. So we're right in the warehouse there. Basically, I got in this at 89.75, so I'm down 15 cents. So no big deal. Basically, even Steven so far on that trade. We'll see how that goes in the coming weeks to see if the FXC can get a bid. A couple reasons why I'm in this. One of the bigger ones is because of the Commitment of Traders report is showing the big institutional investors are long the Canadian dollar. And usually that's the Commitment of Traders or institutions are usually early to the party there, and they've been long the Canadian dollar for almost a month now. So we'll see. I'll be looking for a pop in the Canadian dollar over the next this week or next week time frame. Corn's not doing much. It was up 12 cents a day, no big thing. I like corn. I'm still in corn. I'm actually in the money here by 35 cents, 30 whatever it is, 38 cents. Nothing to write home about. The reason why I like corn is this big up bar and this sideways consolidation. It's above the 20 moving average now. It pierced the 50 today, so we're looking to see if we can't get above that 50 in the coming days, confirm above it, and possibly get a pop on corn soon. Looking at the weekly chart. As you can barely see it here because of that New Year marker, but you can see right here you basically have a bottoming tail on corn back on the 6th of January, and then you got sideways consolidation, which is basically mimics the daily chart, which is basically consolidated daily charts, what a weekly is. So it's sideways consolidation, and we're on our 4th week here. So corn, I expect news to come out on corn in the next 2 weeks, possibly to give corn a pop, maybe a corn shortage or somebody buying a lot of corn or something to that effect in the next couple of weeks. According to these charts, is what the charts are telling me. So we'll see if that actually happens, and I'll be able to look back on it in these videos if it actually does happen. So that's what I'm looking for. Corn to pop in the next 2 weeks at least, or at most. All right, moving on to Bank of America. I am short this equity. It's down 40 cents. I actually have a bear call spread on this equity that expires on the 21st. So we're handsomely in the money on the Bank of America spreads here. So we'll let this thing ride out with a weak market. And Bank of America not too volatile. I think we're so far we're so good on this on Bank of America. This big large down day here shows with some volume, and that implies some further downside to go. The 50 moving average is a support line. It probably could be considered in spirit of touch on this day on the 27th. So this would be the second time it approaches the 50, and the second time an equity approaches a line of support or a line of resistance. That line is weakened the second time around. So it may get a bounce, but we get a smaller bounce, and then the third time it may break through or get even smaller bounce. So we're short Bank of America, and we're looking pretty good. All right, folks. It was a tough day on Wall Street. If you were long this market, thankfully we're not long this market because we see this chart, this big down move, sideways consolidation, and we knew the down move was coming. Like I said, once we got through this 177.32, the dam is going to break, and we got downside downtown Charlie Brown we go. Again, I think we're into some resistance here at the 174 level. I think there will be a small bounce associated with this level before more downside action. So what am I expecting in the next couple of days? Maybe a small upside bounce here over the next couple of days. You might get back to this 177.32, but if we confirm below that level tomorrow, that becomes a source of resistance, and you'll bounce off that level when you go up and hit it. But we'll see how it goes. Again, this market is weak. It's on borrowed time, so be careful out there. Have your stops in place. Be disciplined, and don't think that you're gonna. You can't outmuscle the market, so to speak. So the tape is the tape, and you don't fight the market. So let the market come to you. All right, folks. Have a great evening.